So just like that, the narrative and sentiment for Tesla the business and Tesla the stock has done a 180-degree turn. Today, we'll review what several institutional analysts as well as what our retail analyst community are now saying. First, we have videos of Dan Ives of Wedbush Securities, who says this is the inflection point for Tesla the business, and the story for the stock was all about gross margins. He said Tesla just delivered an early Christmas present for investors. Second, Cannacord George Gianarikas outlined his bull case. Surprisingly, or maybe not so surprisingly, while he says they are big believers in autonomy, they still don't put any value for it in their new price target of $278 raised from $254. Pretty weird. Finally, we also have one of the most respected Tesla retail analysts here with us, Larry Goldberg, and he'll give us his analysis of what happened. Welcome. Thank you for joining us, Larry.
Thanks. Great to be here, Herbert. You call me most respected, but I got my earnings for the quarter so badly wrong that I'm going to retire hurt. I mean, my goodness, what a quarter, what a recovery. And here's the lesson. When Elon tells you he's going to, this year is going to be better than last year, believe him. When Elon tells you that the price drops are appropriate and the right strategy, believe him. I mean, where we are now is we've dropped prices across the range by almost 20%, and yet we are creeping up and with every prospect of getting back to the kind of levels of margins that we were earning. And the bottom line is this dramatically expands the TAM for the product. Even the products without new products are going to see a widening TAM because of the drop in price. And the proof of that is we see the September numbers coming in from Europe, and they're very, very good, which is where we were all wrong about, deliveries. So I really think that we've turned a very important page. And I said last night again and again, this is like deja vu. This is like first quarter 2020, when, the stock just galvanized after years of, just slowly incrementing and then sometimes dropping. And what happened? Suddenly we saw margins that we've never seen from auto companies before. Suddenly we saw the margins times the increasing volume give us a clue about this incredible operating leverage that Tesla has. And boy, we saw it this last quarter in spades. So great quarter, and it speaks to all the promise that we've been talking about for the last year and a half, while the stock has been languishing. In fact, it's been languishing for 3 years, truth be told. But there you are. We're in this new environment. We're going to see improvement now quarter by quarter, and we're going to see return to the kind of levels of revenue growth and, more importantly, earnings growth that we've got used to, in 20 and 21 and into 22.
Thank you so much, Larry. Are you still going to stick by what you said yesterday about your forecast for what might happen to Tesla's stock by the end of this year?
Yeah, I think we are realistically looking at a potential for 300 for the stock. This is not investment advice. My prognostications are no better than anybody else's, but my sense is that we're going to see both operating leverage dial up in this current quarter and it become evident. I think Elon gave us guidance that we're going to see 516,000 plus deliveries this quarter, with improving margins on Cybertruck, and with the kind of operating leverage we get out of that improving revenue, I think we will see a very significant rise in earnings potential, earnings and earnings potential. And I think the stock is going to be repriced to 300. And we're going to see version 13 or early releases of version 13 of FSD. And with the improvement we're getting in 12.5 and 12.6, I think that's all of that is going to conspire to give us this 300 price target of mine by the end of the year. And I've been very cautious about near-term prices, as you know, over the last 2 years, very cautious indeed. But now I think, this new book that Elon talked about has been opened. I think we see the first chapter, and I think it's going to be very strong for the stock price.
Okay, thank you. Well, as of the recording, we are at $250. Many of the Wall Street analysts have changed their tune. Obviously, they have to follow along. You can see here that many of them have actually raised their Tesla price targets. Across the board, it was a fantastic earnings call. No one can say anything negative about it, honestly. Bank of America, 265 from 255. Goldman Sachs, 250 from 230. I guess, your $300, these guys are a year out, right? 330. Everyone else is still
next
under.
year. So those are over the next year. So I think those are actually below my targets.
They are absolutely below your targets, and most of ours as well. It's unbelievable. I mean, these guys are saying 238, and currently today it's at 250. Yeah, you're laughing at JP Morgan and Wells Fargo.
I love JP Morgan. I mean, I do bank with them as well as with Schwab. I love JP Morgan, but my God, have they read Tesla wrong consistently over the years? I think Jamie Dimon must get together with Elon and make peace. I really do think so. I think this court case is ridiculous. JP Morgan have a court case against Tesla. I think they need to make peace because I think, these are two guys that really speak the same language.
And then they just raised it by $5 and they're still at 135 Wells Fargo. All right, let's take a look at Wedbush and of course Piper Sandler. They're all at 300. Let's take a look at Dan Ives. Dan Ives said the story with Tesla earnings is the gross margins. That's the really critical thing. Let's watch his video here. And
with us here, Dan Ives, Wedbush senior equity analyst covering tech. I know you're going to want to talk about Palantir eventually, but let's talk about Tesla because those numbers are out now. Revenues are light, but hey, earnings. What matters more here?
I mean, the whole story is about gross margins. I mean, that's really been the headwind on Tesla stock. I'd say $30 to $40 of a headwind to the stock. You saw gross margins. I mean, this is a blowout. Not even us thought that we could see a gross margin where essentially is anywhere from a 200 to 300 bit beat. This shows price cuts now under control. Margins start to tick back up. You start to get now toward 20% gross margins. I think this is the start of the stock ultimately. This will have a 3 in front of it as a stock as the gross margins start to trend up and as well as growth into next year from a delivery perspective.
So does the robo-taxi stuff matter?
Look, I think longer term, we think the longer term story here is autonomous, is robotics, is essentially the AI play. Street, what they needed to see here, show me margins. You cannot have margins going toward 13, 14%. Now that margins are starting to level off, that is so important, not just from a cash flow perspective, but showing the worst is in the rearview mirror. And when you think about all the bears and all the negatives, it comes down to deliveries will start to uptick. China, I think, is a source of strength in the quarter. But that gross margin, it's a Goldilocks for any bear. Okay, it's a Goldilocks for any bull. The bears, it's kind of a nightmare for because that was ultimately the core of the story.
Yeah.
I'm going to pause it there and talk about this because I think the general belief is that because Tesla is a story stock, because it's a growth stock, and you need to stabilize the fundamentals of the business first.
Right.
And if there's a falling gross margins, falling vehicle sales, nobody can even consider giving any kind of value for the robotaxi or the bots. But now that this is stabilized, in fact, going to grow again significantly, now it's time to do this. What was your thoughts on so far that first bit that he shared there?
Yeah, so Dan Ives is one of my favorite of all analysts. He's favorite of all time analysts because he's so colorful, but he really talks very solid game. And I think he's absolutely right. Look, we're going to see improving margins from this point as Cybertruck ramps up and improves its margin. It only just, broke through the break-even point, and it's going to improve significantly. I've read the 10Q carefully, and I see the breadcrumb trails all the way to a significant increase in gross margin. I think the the volumes are going to increase as well, and he pointed to that as well. So he's right. This is a Goldilocks moment, and he has his his baseball imagery, and I don't relate to any of those guys. For me, let's just call it a Michael Jordan moment, because that's the one sports guy I really understand.
Nice. Okay,
to
let's
your
finish
point,
up
free cash
this,
flow, $2.74 billion. That trounced expectations for Q3. But some of the details we're getting here on the outlook, I think, are also really notable. They're basically saying, despite the ongoing macroeconomic conditions, we expect to achieve slight growth in vehicle deliveries in 2024. Also talking about energy storage deployments that are going to more than double this year. But perhaps this is most notable because I know you've written about this, saying plans for new vehicles, including more affordable models, remain on track for start of production in the first half of 2025. What should we take away from that when I know a lot of folks have been looking for a sub $30,000 vehicle? We're even expecting to get some details on that at the Robotaxi event, which maybe was unrealistic.
The linchpin to the story from a growth is a sub 30K vehicle. And I believe that hits by middle of 2025. That's the growth. I mean, that's ultimately, you're talking about like single digit growth this year. That's how you get to 10, 12, 15% type growth. Margins under control. That's what the bulls want to see. And I think the fact that they actually doubled down on, and I expect clearly on the conference call, they'll focus not just on margins, but more details around that vehicle. Look, Robotaxi Day, we could argue, many would say that they're disappointed. I believe ultimately that shows the vision, the autonomous and the AI vision. Street need to ultimately see. Stop talking the talk, walk the walk, show the margins. They did it. And Musk really has, I think, stepped up in that capacity.
In what's been a year of softness for EV demand and obviously more adoption of hybrid vehicles, for example, are we going to look at Q3 as an inflection point for that changing, especially when you look at results like this today? Or is this a Tesla-specific story as they do deploy more manufacturing techniques, more software, more AI, both internally and externally?
I think it's a combination. I mean, you had you look at GM's quarter. I mean, that was a Juan Soto-like quarter for GM. And then you look at what we've seen in terms of Tesla. I believe this is the inflection point. This right now is the start, to me, of what we're actually starting to see from a gross margin perspective. The renaissance of growth come back. They've essentially been in between two growth waves. Next year, you have a sub 30K vehicle. Then the autonomous and AI vision plays out. And that's, in our opinion, that's how you get to trillion and a half market cap. And right now, as we've seen, look, New York City cab drivers bearish on Tesla.
Okay.
And I think that's a good setup relative to what we see in the next 3-4 quarters.
Listen, we got to go, but quickly, Palantir, your reaction to that news?
I mean, that's huge. It just shows doubling down on Carp and Palantir on the defense side. When you think AI in the 202 area code, Palantir really owns that market. The fact that that partnership, just like Microsoft and others, we'll hear more in your interview tomorrow, that's a huge flex the muscles for Palantir and Carp.
What do you think, Larry?
Well, I'm not sure why we were listening to Palantir, but he's absolutely right. He's nailed it. Improving gross margins on the existing vehicles, led by or driven by Cybertruck. The two new models early next year or mid next year will significantly increase revenue. It will have a dampening effect on margins for a while because introduction of a new model always impacts margins, and those are going to sell like hotcakes. It's going to depend on how well they produce. So it may well be a rocky year, which is why I think they're only forecasting 10 to 20% increase next year. But I think they're lowballing it. I think it's going to be a takeoff year next year. I think that margins are going to, they're going to fluctuate over the year. But what's going to offset that is the growth of energy. My goodness, Dan missed the whole point about growth of energy. That is a huge story. That is a huge story because we're going to see deliveries from China next year of energy, and we're seeing Lathrop operating at full capacity, and their backlog is billions. I mean, I think it's getting to double-digit billions. So with that backlog, with that production out of Lathrop, and then adding the China production, which I'm sure they're selling out right now, we are going to see a magnificent year next year.
Yeah. Love it. Everything is hitting its stride. Unlimited market is demand is what
And
Elon said for energy, unlimited demand for semi, unlimited demand for robotaxi, unlimited demand for the bot and others. Okay,
Yeah,
so this
I didn't discuss bot. I don't think bot's going to impact financials next year.
no.
That's going to be the story for 2026 or 2027.
Just as just one robotaxi is hitting. So Dan said Tesla delivered an early Christmas present for investors as the bulls got a monster margin rebound and a surprisingly strong delivery outlook for 2025, which we would categorize as an Aaron Judge-like quarter and guidance. Margin spike and 20-30% delivery growth in 25. This is Cannacord Genuity, George Gianarikas. He's interesting. He's very bullish on Tesla, but then his price targets is 273, I think, and he rarely puts out any value for any of this, other than auto. Let's listen to what he's saying here.
You raised your price target on Tesla. You were at 254. You're now at $278. What was the catalyst? What did you see in here that made you want to move your price target higher?
It was a few things. First, the margins were exceptional. And if you recall, over the last several quarters, Tesla's auto gross margins have come down because they needed to cut price based on weakening global auto sales because rates went up. But now they had an incredible quarter from a margin perspective, much better than anyone thought, because the costs of production came down to levels they've never before seen. That was the first thing. The next couple things were, despite skepticism, they reaffirmed that they would be launching some lower cost models in the first half of next year. And as you played, Elon Musk said they would grow sales probably 20 to 30% next year. What that means, what's very, very important for Tesla stock, is that the revenue and earnings growth are going to reaccelerate. And if you follow the growth rates of revenue, that stock very closely follows them. So if we see that reacceleration, which we saw since the first quarter, we're going to see Tesla stock continue to outperform.
I want to go to margin. This is a company that trades on margin. Even though it's a tech company, it kind of trades on margin like an auto company may. Minus those credits, it beat margin by quite a bit. The estimate was 16.3. The actual was over 17%. What does that tell you about this company going forward? Does that also settle some of these thoughts that Elon Musk is distracted? We've seen him on the campaign trail. We know he has other enterprises. Does this settle this in the mind of investors, at least in the near term?
At least in the near term. What the company has said, what Elon Musk has said consistently, is that their competitive advantage will be manufacturing, the machines that build the machine. And they continue to show time and time again that they're able to lower the costs of production and be the only or one of the only companies in the world that can make money in electric vehicles. So this is a consistent story behind Tesla. Their cars are great, but what they really have mastered is the ability to make them. And that showed up last quarter.
Okay. Let's talk about the broader sector right now on two different angles here. Number one, EV stocks, they're up right now. We're seeing Lucid's up, Rivian's up, the Chinese EV makers, they're also up. At the same time, we're seeing Lyft and Uber down. I believe that's tied to some of the robotaxi announcements they made during the call. Just kind of give us some color on both of those, how you see Tesla influencing both the EV market and also the ride-hailing market.
Sure. So over the last several quarters, people have been concerned that the EV market has slowed down, and that's fair because it has. But we actually put out a couple of interesting notes about what's happening in China. In China, ICE vehicles, traditional internal combustion engine vehicles, those sales have collapsed in 2024, and EVs are actually doing well. We think that's a sign of things to come for the Western world as EVs continually proliferate. So that's the first thing. The second thing on autonomy, look, we're massive believers in autonomy. We think the future of mobility is autonomous. We agree with Elon Musk. We disagree with some of his timelines. So he was out there yesterday reaffirming that the Cybercab will begin production in 2026 and traditional Tesla vehicles will be able to operate autonomously starting next year. That's put pressure on some of the ride-hailing stocks. But we're big believers in both electrification and autonomy, and those are the two areas where Tesla is focusing a lot in the near to medium.
What did you take from what he just said?
Yeah, so on balance, I think, Cannacord Genuity have been very close to the numbers, close to the mark all along. So I put a lot of, credibility into what he's telling us, what he's saying. I just think he should be a little bit clearer about where he thinks the numbers are going to come, what he thinks the numbers are going to be for ride hailing and robotaxi, and give it some credibility.
That's good. Let's go to the next story here. Very interesting. Same story, RBC Capital this time. And this guy's interesting because he always says the same thing, which is, I believe in Tesla. But guess what? Robotaxi, I believe it's going to happen 2040. 2040. Let's go listen to what he says here.
Believe it or not, the 17.1% gross margin ex credit was a strong beat. I do think if you take out those FSD deferred revenue piece, you still come out with a very strong gross profit margin ex credit. And that comes with all those price cutting. So exactly that is why we actually think that the automotive performance was actually pretty healthy. They were able to do it with substantial price cutting. Look at the other OEMs, the legacy OEMs, what's been happening to their margins with price cutting. And I actually think the setup for next year on growth, I agree with Colin. It's not going to be 20, 30% that maybe Elon is saying, but we have a 13% growth rate, which is actually where consensus is. There is growth rate, and if they can do it with the margin strength that they have, now folks can stop thinking about the automotive piece and margins and start looking at what really should drive the stock, right? Which is non-automotive things, energy storage, autonomy, potentially Optimus. But now I think it's more of the distraction that was this automotive piece. Now folks can turn their attention to things that actually drive the stock price and the market capitalization to where it is.
Okay. Yeah. That's saying exactly what we were hoping that these guys will start saying.
Not really. Tom is saying, he sees a 10 to 15% increase in sales. And Elon's telling us 20 to 30. I think it's 30 to 40. I think Elon is somewhat sandbagging, but I've done the numbers and I'm looking at actual, increases in Cybertruck sales. I'm thinking about the second half of next year with the sub 30,000 beginning to ramp. I can't see them not achieving that sort of goal, given the quarterly sales this quarter and the improvement we're beginning to see in Europe. I'm there. I think the least growth we're going to see is 30%. And robotaxis are going to come in 2026. There's no doubt about it at all. I think next year we will see, one or two or three geographically constrained tests. And I think in 2026 is going to be rolling out in very serious numbers. So his 2030 mark is, I think, out of court.
Yeah, exactly. For robotaxi, Elon was very, pretty clear that he felt that it was going to be volume scale of Cybercabs 2 million by the, probably run rate by the end of the year 2026, not just launching it. So there was a confidence there about that. Okay, so let's take a look at what retail analysts. I know that you kind of gave your feedback at the beginning. Here's Justin from, I've had him on the channel a couple of times now. He's called Lord Pretty Flacco on X. But he does this model. He's saying now that there's about a $200 to $400 of present value that needs to be added to Tesla share based on autonomy alone. This is the whole story, right? So, okay, you believe in autonomy. How many of these institutional analysts have we heard? They believe it now, but they won't put any value. And if you do, you need to put some present value because the numbers are so big. Here's his analysis. And he had this thing where you have a bear case, a base case, and a bull case. A bear case would be if they launch robotaxi in 2027, and a base case is if they do it in 2026. But now that they actually said they're going to do it next year at 2025, a robotaxi paid service in 2 states is going to launch. That's what they said a couple times here, launch in 2025. It's a bull case. So if you look at the bull case and you do dollar cost average here, then you'll get $200 to $300 here. And this is what he's saying. So he's saying now, given the fact that we are in a bull case scenario launching in 2025, Elon's new guidance of Cybercab is 2 million. in 2026, we're actually going to be ahead of schedule in his most bullish scenario. As soon as analysts reduce their discount rates and properly model out this business, all that intrinsic value will need to be priced in. That moment is what Justin's been calling the great repricing of Tesla, and will likely now occur in 2025. What do you think about his analysis?
I'm absolutely aligned with him, except I think whether he likes it or not, and whether the institutional investors like it or not, there is some FSD priced into the Tesla stock right now. There's no way a stock earning what it's earning with its earnings history of what it's got could justify a $250 to $300 price range. No way. So the market, in its wisdom, and despite the institutional attitudes, and despite the analyst attitudes, they're pricing in some component of FSD, and it may not be labeled in people's minds, but it is, the Elon aura on the stock. It is the faith in Elon, and wrapped up in that is FSD, because that's what Elon is basing his hopes and his ambitions for Tesla. So I would say that if he's talking about 200 to 300, I would halve that number, honestly, in terms of 25 and in terms of 2025. So I would take a more cautious approach, but look, he may be right. I'm not wedded to my analysis. So that's the only thing I would say, but otherwise it's a very good analysis.
I appreciate that very much. Like you said, right? If the core auto business continues to improve, if the macro continues to improve, then that allows, and then we see the actual pilots, not just pilot, but actual launch.
Yeah.
There could be the great repricing then, but like you're saying, it might be too soon. Really appreciated you, Larry. Having you on today was so critical for me, because you are one of the best retail analysts we have in the community. You have your forecasts. We've been doing shows on energy 6 months, a year ago, and everything you said then is showing up. 30% gross margin. You were predicting that, showed up yesterday. We've done shows on the only thing that hasn't showed up yet is the partnership that you believe is going to happen soon.
It's coming.
I agree with you.
No doubt about it.
I agree.
I've never been more certain of anything in my life. And, we're going to see a little bit of road behind us in terms of full self-driving rollout before it becomes evident to the major OEMs that they have to do something.
Yeah.
That's what happened with supercharging. It became evident they had to do something. They were dying out there. Now they haven't recovered from that because they did it so late.
Yeah.
That's the problem they're having.
I appreciate the shows we've done, because if you on the audience there want to watch his shows, it's fantastic because he comes with actual data, real information, not just saying it. Follow Larry on his X channel at Tesla Larry. Thanks, everybody. Bye-bye. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.